concerned. I have some questions.
Well,
We're going to find out. I think we should show it. Let's see what they think. All right. Hey, welcome to the Closing Beat, everybody. Happy Monday. How we doing out there? All is working. I hope you're having a good day, and thanks for joining us here. It's a quick show that we do. We're financial advisors. We call ourselves Jazz Wealth because we're a little off beat. Yeah, that's pretty much it. Hey, the story that the market was telling, and I did the whole thing on Thursday about this, was that not like perfect? I mean, you can see it built in there. I hope you learned something from that on Thursday. If not, there's more lessons to be learned. Actually, our Wine and Wealth class last week, we had a frank discussion about your dough. We talked about all the new sort of out-of-the-box ways that we're going to have to think about, your dollars, right? Your tax dollars, how to keep more of it, your investment dollars. And so we covered a few scenarios. We're going to be expanding into that more and more. Our Notes from Jazz email, we send it out every single weekend. We talked about how last week every single day was down, and what does that mean? Does it mean anything as far as the stock market goes? So we analyzed every single other time that that's happened, shared that with you there. And like I said, it's kind of exciting that the market was able to tell you ahead of time what it was feeling, what investors were feeling, and you saw a lot of that today, even though we finished a little positive on the day. It was kind of cool. I do have one problem, though. I came to work today, and I'm going to let Cody explain this. He doesn't know this is about to happen. But I have some questions, Cody. First of all, what the hell is that? I put the camera in this back room here so that they can all see. I come into work. There's an office that is set up with a golf mat, a golf net, and just didn't know if you wanted to take a second to explain that. What's going on?
Well, Saturday morning, we went to the South Florida football game with the Gators and stuff.
Yeah,
we were supposed to go golfing afterwards.
Mm-hmm.
It was raining, and I said, "Well, we got some extra room. Why don't we just go hit some golf balls into a net?"
Yeah. Okay. Well, so I wasn't expecting that one there. That's a little different use of the office than we thought, and we'll see what happens. That's not the office that we're betting on, by the way. That was a separate one. It's supposed to be our backup office in case it's raining, it's really loud, we have a place to go for the closing beat. But that just caught me off guard a little bit. So I thought I'd say, whose office is this? Apparently, I got to use it now. I mean, it's there. I'll give it a shot. Maybe we'll have some fun there. Anyways, we're taking a look at the stock market here today. Let's see what we have, and then also throughout the show, or as we get going through here, I'm going to actually share with you the latest proposals from the House Ways and Means Committee that I read exactly from their proposals, not from what articles are saying and stuff. So I'll share some of that with you here. But if we go over to the S&P 500, you can see that story from Thursday carried through on Friday. We had a negative day. Today, it was a lot of pressure, I thought, to the downside. You can see besides the late day rally after 2 o'clock, look here's the overnight action. We go all the way up, had a nice start to the day, and then just smack, little rally, smack, little rally, smack, and it just kind of kept happening. A little quiet over lunch, that's to be expected. This is a 5-minute chart if you're following along here. And then we sold off into the afternoon, a little bit of a reversal at the end of the day, actually just enough to get us positive for the day. And why is that? Well, because we find ourselves very near the 50-day moving average again, which we have not broken all year long. We've been above the 50-day. Will this be the time that it happens? I don't know. One thing that I thought was interesting was they came for the stocks that have been strong. Normally, when the market has a weak day, you've seen the weaker stocks just get a little weaker, right? Today, they came for the stocks that were already strong. I thought that was kind of interesting. Look at a couple names here. You got Moderna, otherwise very strong, pulled back today. Albemarle, I'm going to zoom out a little bit so you can see, very strong, pulled back. Fortinet, pulled back. Look at the sort of common pattern through all of these very strong stocks that just pulled back. You got energy and utility stocks actually pulling back on the day. Very, very interesting how those ones took the hit today. So we haven't seen that. Right? And they got hit in a hard way. If you go through the S&P 500 and just kind of scan there, very interesting. Now, all that to be said, there was only a couple sectors that finished the day down. You had utilities and healthcare were the only sectors really down. Materials were basically flat. Everything else was positive. So those big, like the stocks that were the strongest getting hit was enough to kind of hold us back throughout the day. There was a little small bounce before the end of the day there, but still that was an interesting tell that we have not seen in the stock market yet. Prior to the last pullback anyways. All right, if you're looking at the NASDAQ here, Not much going on as far as anything to get real excited about. Still right at the highs there. The same holds true for the NASDAQ. The stronger stocks took the hit today, but there was still some good stuff out there. Marriott trying to break out of the downtrend again. COVID cases dropping, so that's a good thing. Intel maybe trying something here, right? We've been beaten down with all the backlogs and delays that they have. Got a little bit of strength here today. Semiconductors in general are stronger. I'll go over that here in just a second for you. And I'll mention that the Netflix, I had sold the 650 calls. Those are gone. That one is done and out of the way. Now I did latest idea here is Salesforce. Sold the 240 puts there for about 350 for October. There's a 28% chance that it closes below 240 before essentially Halloween, if you want to think of it that way. So looking for a bounce on Salesforce.com, or just it can go sideways. That's fine with me. Speaking of Salesforce, that takes you over to the Dow. The Dow, hinting at a breakout, all of a sudden sort of fails there. If you look inside the Dow today, the weakness was in the higher price stocks. That's important because the higher price stocks have a higher weighting. The Dow is a price-weighted index, unlike the S&P 500. So Salesforce.com, that pullback today, obviously holding things back a little bit. Even Visa, not too bad today, but that's a higher price stock, so having a little bit more contribution there to the downside. And Nike was the biggest loser as Nike continues to pull back. That's really it as far as the Dow goes. You got healthcare stocks like United Healthcare, and healthcare stocks in general really tried to help out today. But that's pretty much it there. If you're playing against the Dow, I believe we have a winner there, so we'll let Cody explain that and see what we got.
Yep, we got our winner from last week. Our winner from last week was Chris Heigl. He is not a client. He'll be getting the $100 gift card. This is actually his second time winning. He won back in April of last year, so congrats to him on becoming another two-time winner. That's pretty good. I would like to know how many of those we had, by the way, how many two-time winners we had. But yeah, good for him. We got a new leaderboard for today. On today's board, we got Mark, Daniel, Bia, MD, and Thomas. Those are your top 5 to start off the week.
It's B.
Well, actually, yeah, okay. Sure.
It's B.
I'm not going to argue.
Golf guy. All right, so that is Guess the Dow. I hope you'll play if you want to play. It's no strings attached. As many of you have played over the months and years that we've done this, you know you've never gotten a spam email. You've never got spam from anybody else. We don't sell any of your information. Just a fun game, way to play along if you'd like. One last thing I'll point out, Bitcoin. I know you like your Bitcoin out there. A little bit more of a volatile day today. Continues its pullback overall, and I think a lot of you are hoping for that. One thing you might want to know is that in the proposals today, that they put out to finance the lots of trillions of dollars that we're spending. One of them was to get rid of the wash sale rule. You may know, and I brought this up to clients in the past, that doesn't apply to Bitcoin. It actually doesn't apply to digital assets. Well, they were very specific to say that's going away. So if they get their way, next year you will no longer be allowed to do that. That was just a matter of time. As soon as things start making headlines, they found a way to just go in there and take care of it. So it's a little bit of a bummer there. But wash sale rule will be in effect for Bitcoin and digital assets, is specifically how it's worded, starting next year. All right, other proposals real quick, just to run through them there. Top marginal tax rate, married filing jointly, is going to be 39.6%. If you make over $450,000, if you make over $400,000 and you're single, that will be your top rate. The capital gains rate, top capital gains rate is going to 25%, which is really 28.8% if you add in the surcharge there, so that's what they're looking for. They are disallowing net business losses for those of you that are not registered as a corporation. That's a little bit different. A net business loss would mean that you were working, doing something, you had expenses, and you brought your expenses to offset your income, and then some. You'll no longer be able to go and then some. It's actually just going to be able to carry forward. 3% flat tax on married filing jointly if you make over $2.5 million. I don't know too many people that's going to affect, but I can count on this hand the number of clients that will. Interesting, there'll be no more IRA contributions if you make over $400,000 and the value of your IRA is over $10 million. So they don't want the value going too high there. Anything over $10 million, at least as they propose it for right now, you'll have to take out 50%. And initially it wasn't clear. Well, what if you're 30 and for some reason you have a very high IRA? Well, they're going to have a separate withdrawal rule that's called 100% withdrawal rule or something. So you'll be able to fix that there. RMDs will be required if your value of your IRA is over $10 million. They're calling it the 100% distribution rule. That's what I was looking for there a second ago. This is the interesting one here. No more backdoor Roth IRAs if your income is too high. And, I mean, you might say, all right, I don't make $450,000, so not a big deal. No more, for everybody, no more after-tax 401k contributions or in-plan conversions despite your income. That's a big one there. That one's not kind of making the headlines there, but that's how it's worded specifically in there. I can pull it up. We talk about it if you want, but that will no longer be the case. And if you like your cigarettes, they're doubling the excise tax on cigarettes. That one's a no-brainer. Anytime they need money, they go for things like that. There's a lot of other things in there, including tax credits up to $12,500 a month for newscasters. So that doesn't affect us. I just thought, oh man, they're going to have a field day with this one when you have the CNN and the Fox and all those people going against it. We'll see what happens there. I believe they have to be local newscasters, though. Anyways, that's that. We'll move on. Here you go. Sectors today. Like I said, only a handful of sectors finished down on the day. Materials I'll consider flat as far as being down on the day. One area that's interesting and I'm going to focus on is semiconductors. We saw Intel earlier starting to make a move higher. And look, semiconductors are testing all-time highs. Even had a positive day on Friday when the stock market was down. Lost 4 days in a row, so that's kind of interesting there. Now, most semiconductors are up double digits year to date. I want to share this here with you. Here is some recent performance of the semiconductors there. The list is alphabetical, so you can see that. Notice most of them are above their 50-day moving average, and to highlight that, we put percent from their 50-day moving average. So if it's a positive number, it is above its 50-day moving average by 2%. If it is a negative number like Intel before today, it means it's below it by 0.8%. So that's kind of what's going on there. Now notice those that are above are also the most extended. You've got Monopower here, you've got Microchip as well, and NVIDIA, which is one of the more headline names there. It is the most overbought compared to others. So in other words, if we take out today, you look at NVIDIA, 8.7% above its 50-day. I go over here, I say NVIDIA, look at how far away it was from its 50-day. Hopefully starting to pull back a little bit. So one of the things that you might take from this is it is one of the most extended. Do I want to participate in that one? Or is there something else I could look at? Well, you have the year-to-date performance, the last 5-day performance, and of course how extended it is. So very quickly, by looking at this and just thinking about it for a second, you could say, I want the best year-to-date performers that over the last 5 days haven't struggled much, but I also don't want to buy something that's extended, right? So you'd go over here and say ADI. It's up 15% year-to-date. 4.5% over the last 5 days, so it's trending higher while the stock market was trending lower, and it's not too extended. AMAT would beat that a little bit. Much better year-to-date performance, 58.6%. Over the last 5 days, it's managed a gain, whereas the stock market's managed a loss, and it's not very extended. And so if you were to go just look at a chart, if you like seeing it that way, you'd go like this. Oh, it hasn't really done much since before the summertime. It's been kind of consolidated, right? So that allows you to kind of look at the list and say, well, ADI had a nice run over the last couple days, not extended yet, and seems like it's waking up versus AMAT, which doesn't really seem like it's waking up. Maybe that's interesting. The whole point is to say you don't have to flip through a bunch of charts, put a little bit of data in front of you, and it's something very quickly that you can look at. Micron's another example here. It gets the Relative Weakness Award. Down year to date, down over the last 5 days, and below its 50-day moving average. So if you like looking at the relative weakness for potential breaks of a downtrend, I don't know that this is the time that it happens, but you can see you're very close to that happening. You have a weaker stock, which may have been pulling back here throughout the first part of the year. Maybe there's something there for you. Maybe it goes on a watch list. I don't know. So what I was trying to do is just highlight how you can quickly say, I see that an industry, semiconductors, are doing well at the moment and hitting new highs, but it's not possible that all of them are doing well. Micron is one of the weaker ones. AMAT and NVIDIA stand out as some of the stronger ones, but they're a little, NVIDIA's a little extended. You can look at CLAC, KLA-10 core here, Monopower, and Marvell. You can say the same thing, but some are extended. And so very quickly, you could take a long list from an industry and hone in on a couple stocks that you may like to look at, add to your portfolios, trade them, do whatever it is that you do. Just something different. Thought I'd share with you instead of the normal, and I hope you enjoyed it. Hey, new highs and new lows for the day. There was only one of them, new low anyways. Market excess just barely touches new lows there. Great little sell-off here in the short term as far as being one of the, we call it the exchange, right? It's a bond exchange in a way, kind of a unique company on their own. But hitting new lows, largely seen as a discount here if you happen to look a little bit further. I will point out Procter & Gamble hit new highs, broke out. If I put my little cursor here, you can see you got a series of highs. It struggled to get above it. Today pops above it. And otherwise, I would say kind of weaker market day. It just couldn't hold up. And that's also a big move for Procter & Gamble to have in one day. From the highs to the lows, pretty big range there. Waste Management, just on a tear, right? Waste Management, you know the company. Trash, recycling, things like that. Very strong, continues to be on a tear there. You look at Republic Service Group, it's the same thing. These two are the larger publicly traded ones that everybody looks at. Both very, very strong, seen as a little bit defensive as well. Cintas, there you go. Little breakout. We talked about this earlier last week. Maybe now it's going to pull back. I don't know. Maybe now it's starting to kind of make its way back here. I know people would be looking for that. Technical traders would love it. And over to utilities here. Exelon, the utility company, on a tear. Remember, these slow, consistent uptrends. That's what you want. You don't want the ones that go off too far too fast, and then they got to pull back and try to do it again. It's kind of like bouncing a ball, right? You get a big bounce, a littler bounce, a littler bounce. It's tougher, right? You want the one that just sort of molds itself uphill, really slow and consistent, like that one there. What else do we have here? Well, we'll do stocks in the news, and then we'll let the stream catch up for a second, and if you have any questions, I'll try to answer your questions, and we'll be on our way here. All right, Apple. I think tomorrow we had some data to share on Apple for you because they got the iPhones coming out there. They're going to be, I think, a new iPhone, new AirBuds or earbuds, or whatever you call those things, and maybe a new tablet or something. I forget what it was. Also, Morgan Stanley came out with a decision over the weekend versus Epic Gaming where they said, hey, look, you got to let app users sell their own merchandise in their app and not necessarily charge them 30%. Morgan Stanley says worst case is only going to affect earnings by about 5%, which is a big number considering the size of the company, but a lot less than most people would probably have analyzed there. Alibaba. Looks like China is trying to break up Alipay, so they're not done with Alibaba yet. Down about 1.6. I think some people may have figured that to be the case, and so it's already kind of priced in, but that's what you have. Tesla says going to increase the price of the Model Y in China. Yeah, over in China there. Stock's up just a little bit on the day. I think they can afford to do that and have a little bit of flexibility in their, or they say elasticity in their prices. Yum Brands. Here's one. Cody's going to love this, man. This is you all day, right? What do you think about this? All right. You know you love Taco Bell.
It's not even a little true.
With Taco Bell. You don't like the Taco Bell?
Bell?
All right, he hates Taco Bell. Would you pay $5 or $10 for a subscription to Taco Bell, and then every day you could have one of those Dorito tacos, a regular soft shell taco, hard shell taco? Would you do it?
I like the concept, not a Taco Bell, though. Absolutely not. No.
About Chipotle.
I was going to say Chipotle maybe did something like that, but I don't know what. They're giving me a bag of chips.
Yeah, it wouldn't be $5 or $10, but now I would do that. Now, what would stop you from like, hey, go take my? I guess it'd have to be one a day. But boy, I mean, you're gonna tell me for $30 a month I could go to Chipotle and get a bowl or something? I'm in.
Yeah. No, I would be in for Chipotle or something like that. Yeah.
I mean, probably $50. I mean, you could see how quickly you'd spend that, I guess. Anyways, the point being, Yum Brands owns Taco Bell, and that's actually something they're doing. They said that people that belong to their rewards program spend 35% more. So what other rewards can we offer them? I don't know about that one there. There used to be a thing with Circle K. It may still be. You could pay, I think it was it was $10. Well, back in the day, it was $10 a month, and you could come in and fill your cup as much as you wanted. Unlimited cup thing. Now that was a pretty good deal. Now they're only 85 cents anyways, but I'm just saying now. Anyways, so that's what Yum Brands is doing. I don't know. What do you think? Lastly, you got Coinbase. Well, gee, what's Coinbase doing? They're going to raise $1.5 billion by doing a bond offering for general corporate expenses. And the CEO actually said, I'm borrowing money now because it's cheap and I can. That's the second company that's physically said those words. It's like they're watching the show, man, that is borrowing money when they can, not when they have to. You do the same thing. Approach your financial life the same way. If money is there and available, borrow it. You don't necessarily have to spend it, right? But if you can borrow when you can versus when you have to, you know the cost is less. You know it's faster. It's easier to get the money, right? Less headache and process to go through. Think about that. Corporations have that part perfectly timed. Also, if you're thinking about doing a buyback, part of the deal there from the House Ways and Means Committee was they're going to charge a 2% tax on share buybacks through companies there. That affects you because if you're familiar with that, stock prices go up hopefully because of growth and it's seen as undervalued and everything, but it also goes up when the company buys back shares because it's less shares. If they have the same earnings per share, it means that the stock is more valuable just because the company bought back shares. There's both sides of that story, and I don't take a side on that because I truly have some pros and cons on both sides of whether that should be done or not. But anyways, they're trying to slow that down a little bit, so they said 2% tax. That ought to do the trick. I don't think it's going to do the trick. I think there will still be lots of share buybacks. Yeah. You pay $10 for a little Taco Bell? Smashburger had a subscription for that. Oh, man. Now, I've only eaten there a couple times. I think we have one by us, but that wasn't bad. Now, BurgerFi, I could tear up some BurgerFi, man. No problem there. Cool story about the owner of BurgerFi, by the way. He's filthy rich. Yeah, I love it. So I see a lot of you saying you're using this pullback to find those weak stocks. Take your shots. And I don't mean Pfizer. Like, take your shots at buying stocks on pullbacks. Awesome. Yeah, I love it. This is what I've been saying for a while here, that the stock market seems like it's doing just fine, but there's lots of stocks that are really starting to shape up for these decent pullbacks here. I like it. Intel, Broadcom, okay, cool. Yeah. All right, you guys are no dummies out there. Yeah. Okay, so going forward here, stock market. Every single person, it will even be mentioned on TV, if the 50-day moving average breaks. How do you define break? You would have to close below it, and then the next day either trade below it or close below it. Usually technical traders use that second day as confirmation. So a close below does nothing. You can see that all the time. Remember, the 50-day moving average, it's a rubber band. It's not a concrete floor. It's allowed a little bit of flexibility. So a close below and then a subsequent close below is what technical traders will look at and say the 50-day is broken. That's where you would actually see that. They would say, we broke the 50-day. That's it. Oftentimes when we close below it and we head into the next day, they'll say it pierced the 50-day, but it's not a break. And I'm not trying to suggest that this means anything, but those are the words that they will use. So giving you a heads up, because I'd rather tell you ahead of time than I say I told you so. Yeah. I think BurgerFi will still, they almost did, but I still think they will. I think they're working on that. Obviously, during the pandemic, not a good time to suggest that a restaurant's a good investment, but I think they will. That's his plan. I mean, that's the original founder's plan anyways. Yep. How about cutting salaries for the government? How about that, right? How about you can't do insider trading, right? They're all doing it. Pelosi's taking the hit, but they're all doing it. It's incredible. How is that legal? I mean, anyway, some of the other changes before I wrap it up, they're changing the REIT ownership rules there. That would be the last section that they're adjusting there. Some other stuff here that doesn't, payroll credit for compensation of local news journalists. Nothing over $12,500. The credit for each calendar quarter may not, it was a quarter, not per month. Any excess is treated as overpayment. Okay, it'll be refunded. What was the other one there? A payment to certain individuals who die fuel. I didn't know that was a thing. Yeah, you can actually get a tax credit for that. Section 408, something interesting there. Oh, and lastly, a treatment of certain qualified sound recording productions. Section 138.510 will amend Section 181. It is going to permit taxpayers to treat as currently deductible expenses the cost of qualified sound recording productions not to exceed $150,000 in a year. The bill defines sound recording productions as certain sound recordings produced and recorded in the United States. That's it. That's all they say. So when we started the show today, we had produced that sound recording, and I imagine there was a cost to that, right? These are the kind of things I'm talking about. That's the law. You can, if you're an accountant, it's proposed to be the law, but that's the kind of thing I'm talking about. You no longer are going to be able to say, I contribute to my 401k and therefore my taxable income is lower. You're going to have to think outside the box a little bit. Did I record any sound productions? It does not say you have to be in the industry. It doesn't say anything else about this. That is the actual amendment. So they've taken out a whole lot of words, essentially, to make it easier for you to get that. Qualified sound recording production expense. You know, there's always a little bit of stuff like this, right? This is just the start of it, too. This is the proposal. Yeah. And then they basically say they're going to double the excise tax on cigarettes and the vaping things and things like that. But then they've reclarified the rules for drawing back on those tobacco credits. You can get a refund of certain duties, taxes, and fees. Of the excise tax as well. It's called a substitution drawback. It's kind of fun stuff, huh? I like reading that stuff. So I always read all these different things. It's likely not how it's going to finish. They may have to make adjustments. You've seen how the one guy, West Virginia guy, Manchin, has already said he's not going to vote for it. There'll be changes to it. They'll put something back out there. It's a game. It's a whole thing, man. They start messing with your dough. I've got some problems there. Yeah. What do you think? CPI higher or lower? If you had a friendly, had to bet, make a friendly wager. Huh? What do you think it actually comes back as? I'll let you guys see, and we'll be back, of course, to cover that, right? We'll be back tomorrow to do this all over again. Hope you enjoy the rest of your day, and I hope you learned something here today, just to try things a little bit different, throw some different things out there to you. And we'll do this again tomorrow. Enjoy, and thank you for watching.